Alright, welcome everybody to another video on the After Hours channel. In this video, we're going to be covering a few different things. To start things out though, we're going to be doing a portfolio update, which I do in all of my videos. After that, we're going to be jumping into my recent buys and sells, which are quite extensive, so I highly recommend sticking around for that. Third on the list and the main part of this video, I'm going to be diving into why I sold Starbucks. If you're an investor in Starbucks or you want to potentially hold this company in the future, I highly recommend sticking around for this as well. And last on the list, we're going to be taking a look at my upcoming dividends in my six-figure portfolio. This is going to mark episode 8 of Road to 1 Million. If you guys are unfamiliar with what that is, I'll be tracking this portfolio that you see on your screen right here all the way to $1 million. You'll be able to see my trades, which are weekly, my dividends in a six-figure portfolio, and I'll also be giving you guys a heads up on which companies I'll be buying in the future. As we can see, the market is currently down today. I'm down almost $700, which equates to 0.57%. If we take a look at the 1 week view, we can see that my portfolio is down $1,000 or 0.83%. Taking a look at the 1 month view, things are a bit different. The portfolio is up $4,500 or 3.87%. So this is definitely something I like to see. Moving on to the 3 month view, and we can see things are really starting to go in the direction that I would want them to. The portfolio is up $5,000 or 4.34%. And lastly, taking a look at the year-to-date view, we can see the portfolio is up $9,200 or 8.27%. In my opinion, this is definitely a great way to start the year off. Markets have been down recently over the last few years, so this is definitely something exciting to see. And for those investors out there that need an emotional boost, I'm sure this helps as well. With that being said, I want to remind everybody that I am a long-term investor, and even though these green days are obviously something that I enjoy seeing, it's also a minor blip on the radar in terms of long-term investing. If you're investing for 20 years, 30 years, or potentially 40 years, you're not going to remember the day that your portfolio went up 8%. As I try and mention in all of my videos, as long as you stay focused on your goals, you're buying high quality companies that return money to you as the shareholder, and you're consistently depositing money into your account so that you can buy these high quality companies, you are bound to see a return on that investment. If you guys have any questions about this portfolio that you see on your screen, leave a comment down below and I will get back to you. But with the portfolio update out of the way, I want to point your direction over to my holdings. These are all of the companies that I hold in this portfolio, so feel free to take a screenshot or pause the video to get a better look. If you guys have any questions about these holdings, let me know as well. But without further ado, let's take a look at my recent buys and sells. So, as I mentioned, my recent buys and sells are quite extensive. You can see them all on your screen right here. Starting off with number 1, I bought an additional $51 of SCHD, and that got me 0.67 shares. This was at a price cost of $76. This $51 buy was actually a recent dividend that I received, so it was just redirected right back into my portfolio, and I'll be covering which company gave me that $51 a little bit later on. Taking a look at one of my recent sells, and that was actually Vanguard's Financials ETF. As you guys can see right here, I sold 30 shares of this ETF, and in return I got $2,659. Now you may be wondering why I sold this ETF, and quite frankly, the only reason for it was that I wanted to move my portfolio away from financials unless it was a very specific bank or company that I felt was at a discount or was currently undervalued. Don't get me wrong, this ETF performed really well for me while I hold it, which I believe was for a few years. And over the course of 2 years, I want to say that this ETF alone returned over 30% for me. It wasn't a very large holding of mine or a large conviction for that matter, but ever since the day that I bought it, it has performed well and it was heading in the right direction. At this time in my investing journey, I feel like I could redirect that $2,600 elsewhere and get a better return for it. Moving on to my second sell and the main portion of this video, and that is Starbucks. I sold $2,000 of Starbucks, which would equate to 18 shares at a price target of $107. In the next portion of this video, we'll get into exactly why I sold Starbucks, But for now, let's move on to my recent buy. Taking that $2,000 that I earned from Starbucks, I actually bought an additional $2,000 of Microsoft. That got me 7.7 shares at $256 per share. Now, if you guys are unfamiliar, Microsoft is actually the largest holding in my portfolio. This is a company I have extreme conviction in, and I believe that it is undervalued at this point. Next buy on the list, and that was a $1,000 purchase of Apple. For that $1,000, I got 6.6 shares at $150 per share. Similar to Microsoft, I believe that Apple is undervalued currently, and without doubt, I think it's one of the highest quality companies in the market right now. For that reason, I wanted to up my stake a little. Next buy on the list, and that is Berkshire Hathaway. I bought $306 of Berkshire Hathaway, which got me 1 share. This is a position that I've been trying to build up recently, so with that extra $300 I had, I just wanted to get another share and slowly dollar cost average into this position. After that, we can see that I bought an additional $500 of Union Pacific. This got me 2.4 shares at $200 per share. And lastly on the list, I actually started a new position, and that is in Visa. I bought $1,600 worth of Visa, which gave me 7.55 shares at $222 per share. Now, we won't be going into this holding too much in this video, but I will be coming out with a video solely dedicated to this recent purchase. I'll be breaking down all the financials of this company and why I think it's a good opportunity at this point. If you guys have any questions about these recent orders, let me know in the comment section below. But with that being said, let's jump into the main part of this video, and that is Starbucks. All right, welcome everybody to the Dip Finder. The Dip Finder tracks all the holdings in my portfolio to tell me if they are above their 200-day moving average. And if we direct our attention to the last holding in this list, and that is Starbucks, you guys can see that it is the largest graph on your screen right now at 20%. That means that Starbucks price is currently 20% over its 200-day average. Now, this isn't an indication to immediately sell a company just because it's overvalued or it's above its 200-day moving average, but it gives me a heads up for the holdings in my portfolio that, hey, you probably shouldn't be buying this company right now. It's starting to get into that overvalued territory, or it's been racing up lately. And that is exactly what Starbucks has been doing. If we take a look at my portfolio and go to Starbucks, you guys can see that I currently have $10,000 invested. Now, before that $2,000 trade, I had $12,000 invested in this company. It made up nearly 10% of my portfolio, which is pretty high. While I was dollar cost averaging into this company, things really started to take off, but fortunately I was able to secure an average cost of $90. As you guys can see right here, Starbucks is currently trading at $107. If we take a look right down here, you can see my total return while investing in Starbucks was 18% or $1,500. Now, to lessen my exposure in this company, which I believe has been racing up without tangible evidence why, I wanted to trim some of that fat and some of those profits, which is why I sold $2,000 of it. In addition to Starbucks being 20% over its 200-day moving average, I also want to take a look at some of their financials to further highlight how I believe that this company is no longer within fair value, but it has entered overvalued territory. One clear sign of that to start things off, and that would be their PE. Starbucks PE is currently 37, almost 38, and their forward PE is 30. In my opinion, that is extremely high for this company, and I am not comfortable continuing to buy this company at those inflated values. If we take a look at the 1-year return for Starbucks, we can see that it is up 15%. This company has consistently been racing up over the last year, and if you weren't one of the fortunate people to get in around this area, then your returns probably weren't as good as they could have been. I would put myself in this category as well. I was buying into Starbucks right around this area here at $90 per share. Luckily, I was fortunate enough to enjoy some of the rewards of buying in to this company. But when you're talking about a PE of 37, I think it is hard to justify paying that much for this company. In addition to the high PE and the 200-day moving average, another aspect of this company that I am not too fond of at this moment, and that is their free cash flow. In 2018, we can see that they had a free cash flow of almost $10 billion. Fast forward to 2022, we can see that free cash flow dropped to $2.5 billion. Now, while I still remain bullish in the long term for Starbucks, that is pretty concerning to me. I like to invest my money in high quality businesses that can consistently increase their free cash flow and return that money to me as the shareholder. If Starbucks is losing billions of dollars in free cash flow every year, that means less money going to me. Now, if the previous mentions weren't enough, I want to point your attention to the balance section and highlight the fact that Starbucks currently has $3.3 billion on hand. Compare that to their debt. They have $20 billion worth of debt, which equates to a net negative $17 billion. After taking a look at the free cash flow, I cannot confidently say that this company could easily pay that debt off in a short time frame. If Starbucks can possibly fix some of these concerns that I have, or there's a big sell-off in the future, I'll probably be buying back into this company. In addition, I would also love to see their free cash flow yield go up, which is currently at 1.77. In my opinion, that is extremely low compared to some of the other companies that I hold in my portfolio. And for that reason, you guys can see why I took some of my profits away from Starbucks and lowered my exposure in my overall portfolio itself. If you guys have any questions about why I sold this holding or potentially Starbucks in general, let me know. And just to end things off on this company, I just want to reiterate the fact that I am not telling you to sell Starbucks right now. These are my own personal investment strategies, and I personally do not feel comfortable continuing to hold such a large portion of this company when it's at such an inflated value. So, recent and pending dividends, you guys can see them on your screen right here. Coming in at number 1, and that was JP Morgan. They paid me $24. On February 6th, Jeppy paid me $26, and as of 23 hours ago, Apple paid me $29. If we move on to the pending dividends that I have coming up, we can see that Starbucks on February 24th is going to be paying me roughly $60, and Microsoft, my largest holding, is going to be paying me $70. All of these dividends that I receive are redirected and reinvested right back into my portfolio, further compounding and initiating that snowball effect. That is going to conclude episode 8 of Road to 1 Million. If you guys are interested in the apparel line that I put together, you can find that in the link in the description. I put together 2 different designs for minimalist clothing that is aimed at dividend investors like ourselves. It's worth noting that 50% of all profits from this website will be donated to veterans charities. And if you guys are unaware, I am actually a veteran myself, so that cause definitely resonates with me. If you guys have any questions about the topics we covered today, feel free to leave your questions in the comment section. If you guys have any questions about my holdings or want to see a deep dive into some of your holdings, let me know as well. And finally, if you guys want to stay up to date with the companies that I'm buying over the course of this year, don't forget to subscribe. Thanks for watching. I'll see you in the next one. Take care.